Hey, good morning, everybody. How's it going out there? Happy Thursday to everyone. What is today? October, aren't we? Yeah, October 5th. So, welcome, everybody. Good morning. Good morning, JB, Kevin, Mike, Andreas, Dodger, JW, Joe, Emma, thank you, Jack. Hey, thanks, everyone. I received a couple more of those trade plans last night, and I put them over in a file this morning, and I'll probably this weekend I'll get them together, and then I will send them out to those that sent them in all packaged up. I'm not going to do any changing, no rewording or no spell check or anything. So everybody will get them raw just how they were sent. Certainly appreciate it. Want to remind everybody today that we're having members e-learning with Hit Run Candlesticks, Right Way Options, and BYOB trading. That'll be over in the members room, the combo room. I believe it starts at 11 noon Eastern. We'll get that confirmed for you, okay? Also, big day today, more stuff going on. Lex from Trade Hawk will be here in the Hit and Run Candlestick room today at noon Central time. We'll get some of those questions answered, and I appreciate a few people have sent in some questions that I can ask for you, or you please ask during the webinar as well. But I'll make sure that we get those nailed down for you. We'll do that, okay? All right, let's talk about the market a little bit here. And I must say that we don't need any of that on there. There we go. I have been I've been an absolute bull since what was it? This October low, Jeepers Creepers a year ago now. I've been an absolute bull, and I think I'm going to kind of change this a little bit. I think there's things in the market, in the works, that if something doesn't change, then I think we're going to see more downside. To me, the biggest thing that we can have as a change is probably the Fed stepping in and knock it off with what they're doing, raising rates and everything. And let the market work itself out. We're still going to have higher prices. We're going to still have some, recession kind of thing. That's going to happen. But let the market, let the businesses, let the economy work it out. But they need to stop it with that. If they don't, I am a little concerned that this market is going to remain to the bearish side longer than what we might want. Now, I don't mean for years. That's not what I mean. I mean, shoot, if I had my way, we'd be bullish by this afternoon and never look back. It can change at any time. But I think that's one of the things that we need that's important. Everything else doesn't matter. So I think what we need to do is, as traders, is one, brush up on some shorting. So I'm going to be pretty dedicated in building some scans, which I already have those, but we're going to be looking at that a lot more going forward. Also, there will be some long trades, but I think there needs to be some absolute rules in there for trading those long trades, and that's things that I'm going to talk about here. Not right now. I don't have time. And then, don't forget the inverse ETS, because if shorting scares you, if shorting is a problem for you, whatever that problem may be, there are still some long opportunities out there, and you can do that through the inverse ETFs. So understanding those, having a package of those ready to go. You don't need everyone under the sun. You really, really don't. So there's going to be opportunity for everybody, absolute opportunity. You just have to know where the opportunity is, and we're going to see what we can do to find those opportunities, and we'll do it together. So anyway, enough of that. Right now, my my goal for the SPY, hope, if you want to call it, is that the SPY finds support about the 500 period moving average or 200 period moving average right here, somewhere in the neighborhood of 419. The bulls maybe find their way and lift it up. The thing of it is, that's just me wanting that. Okay, there's no, I see a line there, I see some possibilities, but there is nothing there that says, hey, it's going to happen. So we have to wait for that. And what we're going to do, when I say we have to, did it again, didn't I? There we go. When we have to wait for that, what we want to wait on is an absolute reversal in the market. Now, just putting in one candlestick does not make for a reversal. We need to see that pattern lift up, maybe a little bit of a pullback, and then break out. We need to see that trend. It's trying to catch the bottoms in this market right now, I think is, well, with the right plan, it can be done, but you're going to have to be quick on the gas, quick on the brakes, that sort of thing, because we get a lot of these false little breakouts and little hopeful candles in there. But if we wait for a trend to start and then just trade the trend, I know the attitude there as well, we can't get a trend going. Well, we've got a trend going right now. Okay, so it may not be what you want, but it is a trend, and a lot of people love that trend right there. And we just have to take advantage of the trend no matter what it is. The important thing is allow it to trend. The Qs, I was looking at the Qs earlier this morning here, and the Qs to me are probably acting the best of all. They're holding up the best. Now, that's good and that's bad, because while they may be holding up the best right now, say compared to the SPY or the diamonds or IWM, that also means that there's more to fall there. They're not down toward their 200 period moving average yet, and that's down here to about this 330 mark. And this is also a 50% move from say about here down to here, about the 50% move. So while they're holding up the best, they are also the most dangerous right now if they catch a little wind to the downside. So, it's one thing to say, hey, look, the Qs are holding up and it's okay to be upbeat about that. But just remember, that just means the floor is a little further away, and that could smart a little bit more. So let's be careful with that. IYT, the transports, there is nothing about the transport that suggests there's a bull in town. All the bulls, they're waiting out at the stockyard for the trucks to come get them, and the trucks aren't moving. They're stuck right here. And there's nothing going on. When we want to take a view of the market, we want to make sure that we take in things like the transports, SMH, all this big stuff, because that's what gives you an idea of the overall market direction, the power of the market. And the power of the market right now, in terms of the transports, is not so good for the bulls, not so good at all. Now, here's one of those things, just like I mentioned about the Qs. We are down on where the Qs were holding up, and that's a good thing, but the bad thing is there's more room to fall. If you look at the transports, we can come down here and you can just put a line, just find a center line on your price, the top, the bottom. Support is a figment of everyone's imagination based on price. That's all support is. So where is support? I don't have the foggiest idea where support is. I do know for a fact, and you can prove this in any chart you want to, when you see price action flat like that when we get somewhere, could be at the top, could be at the middle, could be toward the bottom, the bulls will likely step up and do something. Now, it doesn't mean they're going to step up and just get all kinds of bullish and, it's stake for the next 9 years. It's not what that means. We could just get a little wee bit of a bounce popping up here, and really that just set us up for more shorting. So you can see here, if you just put a line just kind of in the middle of all that, we're getting close to that. So like I mentioned with the Qs, the opposite could be true with IYT. We are down far enough and we're getting close. That's bearish, but keep in mind we're at that level where we could sneak up just a tiny bit. I am not looking for any kind of, I would love to look for it, but I'm not expecting any kind of major reversal. And if there was going to be a reversal, it would be, it would have to be up here. All right. So even if the transports got going, that's great for some short-term relief rally trading, but we need to get above 251 based on where we are today to make a big change in the market. I don't see that happening in the next couple weeks. The other one is SMH. SMH, that's kind of holding up, but that's sort of with those Qs right in here. SMH is going to need to get well above the 50 period moving average, I think. Yeah, well above the 50 period moving average here. I'm going to go up here around 153 before SMH could even get in the circle of being bullish. Now, we could move from here to here, and yes, there could be some really good money made in that, but that move up, unless we can get over that 153, about right in there, if we can't get back above that, any kind of bullish rally that is met with some, you know, if we trade it with some success, be prepared for setting up for shorts moving down. Like I said, I'm changing a little bit because I think I think things are changing. Now, it can be solved I think it can be absolutely solved if the Feds would knock it off with all this rate raising and leave it alone. They don't even have to lower rates, just leave it alone. And we're still going to have some kind of minor recession of sorts. As far as I'm concerned, we're already there. You're still going to have $15, $16 meal, you know, McDonald's meals. You're going to have that for a bit. But if the Feds would leave things alone, the natural order of business will take care of itself. But if they don't leave it alone, we're going to have a problem. And I think that problem is starting to unfold now. So we need to be careful. Brush up on those shorts. We can do that. Brush up on inverse ETFs if you want to stay the long side. If you're going to trade long charts, CBOE as an example. If you're going to trade long charts, make sure they're long, make sure they're good, make sure they're solid. This is what I'm going to like as a long chart, something like this. Now that doesn't mean that we won't take a long chart somewhere down here, but you're going to have to recognize where profit should be taken. Whether it continues to go up or not, doesn't matter. You know, if we do something here where you've got a good candle pattern, we've got a change of the trend indicator, the T line's above the trend indicator, we're meeting all of our rules, we can trade that, make sure you have a path to profits, and make sure you take those doggone profits away. Now here's what happens when you look at a chart like this. You look at this chart and say, why should I take profits? Let's just keep it. Look what this thing did. I'm showing you a chart that has had success. So this is what you see. The majority of the charts right now don't have those runs in them like that. I think it was somebody, I forget who, in the room here pointed out that, I don't know, what was it? I don't remember the numbers, but it was an extremely small amount of numbers of SPY stocks are over their 20 period moving average. Something like that. I forget exactly what it was. That tells a story. That tells a big story. That tells you there's not very many charts that's doing runs like this. So, you know, don't get hyped up on, well, why should I trade short like this, short term, like that when you've got charts that's doing this? That's because these are absolutely picked out. These are These are far and few between. These are hunted for, and they're hunted for to get that run so we can continue. These are good, strong charts doing their job. So, you know, sorry, I digressed on that a little bit. Anyway, I really don't have anything to speak of today to show you. TSLL, I bought that yesterday. It looks like we're holding up well this morning. I'm only looking for a little bit of a move, and I'm out of it. I'm going to be quick on the picture here. This chart is just marginally bullish, just absolutely marginally bullish. It has a lot of headroom over it that it needs to clear. That's why I'm very short-term trade. Just boom, move up, I'm out, and take that money. Pay attention to those goals, okay? All right, sorry, maybe this morning was not, certainly wasn't a stock pickings morning. It was more of a, we need to make some plans going forward, and we need to stick with those, okay? And be absolute with our trading. If success is not met, it's not the market's fault. All right, this is where we just have to grow up as traders, investors, whatever you do. It's not the market's fault. It's your fault, and it's your fault for not having a plan. It's your fault for not managing your trades. I'm not, sorry to be such a rat so early in the morning, but that's how traders become successful traders. They grow up, and they don't gamble, they trade. So anyway, I'll see everybody here bottom of the hour. Thank you very much. Take care. All right.